Hey everyone, and welcome back to another video for today. So what a day, right? What was supposed to be a good day turned out to be a very, very bad day so far in the market. In personal life, it doesn't really matter. But in the market, wasn't that great. Across the board, stocks got crushed, but one stock particularly got crushed and then some. That's, of course, the almighty PayPal. Now, the worst case scenario has happened here, and I'll already say it right here. The shares that I had, they've been sold already. They've been replaced by Robinhood shares. The options, honestly, I don't even know what I have to do with those, because when the stock goes down 20% in one day, you can already imagine what has happened with the options. So for now, the $70 strike price January 27, I'll just leave it there. And the $65 for June, I guess I'll just leave it there as well. Yes, it's a huge, huge hit that I'm taking, but it is what it is. What can I say? This is not going to be a video where I'll review the whole thing, because we literally did a live stream, listening to the earnings call and reviewing the report. I will show you a couple of things here and there. So for those that don't know, PayPal has a new CEO. It's actually someone from HP, well, the former president and CEO of HP. He was there in that position for around 6 years or so, but he's been at that company since 2001. I checked the LinkedIn. I was as surprised as you. We'll see. Based on what people have told me, he's someone that is a bit more aggressive. So potential cuts are maybe coming to PayPal. Remains to be seen. But let's focus on what went wrong here. And for the bears and the people that want to make fun in the comment section, go ahead. Do whatever you want. Me personally, when I looked at PayPal, you can go and look at all the videos. I looked at the business. I looked at the valuation. I looked at the numbers. And of course, I listened to what management has told me. Based on all of that information, it looked like a very, very cheap and good investment to make. Turns out, the story was not told 100% to us, the investors. And that, as I've said before, is something that is unacceptable. When 12 months ago, you tell me a good story and how this goes well and that goes well, etc., and then 12 months later, the CEO is out, forget even the 12 months later, 3 months ago, we've had that earnings report when the stock jumped to around $80. I don't think it was fully because of the partnership with OpenAI. It was also because the quarter wasn't as bad as feared. Yes, they already told us about the weaker consumer spending, which continued in Q4 clearly. And well, clearly, MasterCard, Visa, the banks, Jerome Powell, when they said consumer seems healthy, well, apparently PayPal's customers are not that healthy. Now, again, we go back 3 months ago. 3 months ago, you were telling me still an okay story. You're going to tell me that over the past 3 months, you've decided that Alex Chris has to go because the execution was not there? Or is it purely because of the stock's performance? Because if it is because of the stock's performance, then why did you not buy more shares? You have the cash. It is also something that I said before. I said, if we don't see an accelerated buyback, that's not a good sign. If you don't see at least the same buyback for 2026, that's not a good sign. Thankfully, we're still expecting $6 billion worth of buybacks in 2026, which, I mean, the buyback yield just keeps on increasing and increasing. The good thing here is that they're still expecting to generate over $6 billion in free cash flow, which, when you think of it, is quite a good thing. Because despite all the negative around it right now, and there are plenty of negatives around the name at the moment, there are some positives left, right? Venmo that keeps growing and becomes a bigger chunk of the overall business, that's very good. I mean, Venmo alone could be worth what the company is worth today. If they were to sell Venmo today, I think they would probably get $30 billion or so, maybe a little bit more. We'll see. Buy now, pay later. Apparently that's also going well. PSP, right? Braintree. We had a deceleration in growth because they wanted to grow in a profitable way. Now we're seeing 2 consecutive quarters where that has actually grown in a profitable way. contributes to margin, and we see growth accelerate a little bit. So that's great. Branded checkout sucks. And that's their focus right now for 2026. They want to focus really on that and make sure that the adoption is there and faster. But again, the question to them, or just to the camera here, is 6 months ago, 3 months ago, could you not have said the same thing? Even 9 months ago? Why were we not given all of the necessary information during an earnings call or during conversations with analysts? Right? This is not something that has happened over the past month or two. Clearly, they knew about the issues a while ago. They didn't tell the full story. And to me, that's the worst thing, because on paper, when you look at the data, when you look at the numbers, right, the revenue that they generate, free cash flow, the amount of people that still use Venmo and PayPal, when you look at all of that, and then you see this trading at 10 times earnings, or maybe a little bit less, you think, okay, this is just a gift by the market. But there is one thing that can ruin that opportunity, and that's zero execution and bad management. Now, I don't think we've had zero execution, because there are definitely good things that have happened over the past 2.5 years or so, especially since Alex Chris came in. But clearly, the market doesn't like it. The story didn't make any sense. We went from shocking the world to screwing investors over. Yeah, quite a turnaround story. Now, what could happen right now is, of course, when a new CEO comes in, and in this case, in a turnaround story where, well, there are no catalysts in sight, so you put guidance very, very low in order for the new CEO to beat it comfortably. We've seen that with Alex Chris when he came in. Guidance was always very, very conservative, and that was also an issue. He was never really aggressive. Okay, he was talking about the story, but they always beat a little bit, and that's about it. Right now, new CEO coming in, clearly investors are not happy. I'm not happy, you're not happy. Obviously not. But new CEO is coming in. The story, the strategy is still going to be the same, because it is a good strategy. The direction that they're going into is the good direction. But yes, clearly something has happened with the execution, and that has not worked well, especially not when we look at branded checkout. That needs to change. What could happen is that, okay, you steer the ship in the right direction, and you just need a little extra push. The new CEO could be that extra push. Hey, if you want a funny comparison, maybe it's a little bit what we've seen with Intel. Although with Intel, yes, I do think that Pat did come in at a difficult time, did the difficult and heavy lifting. And now, yes, we did get the help of the US government, SoftBank, and Nvidia. In PayPal's case, of course, it was not in the same financial, horrible situation as Intel, because PayPal is still growing. That's the thing. PayPal is still growing. PayPal is still going to generate over $6 billion in free cash flow. And so in this case, the new CEO, in my opinion, just be more aggressive. Okay, if you want to steer this ship in the right direction, unfortunately, you will have to cut. You will have to cut, because this is a company that doesn't need, 30,000 employees or 20-something thousand employees. I'm sad to say this, but you don't need it. And as a CEO of a publicly traded company, it's your job to make sure that you run the company as well as possible. Also, Jamie, CFO, now interim CEO until the new CEO comes in March. I mean, come on. Your job was also to make sure that all of this makes sense. It's a whole new team that Alex Chris actually picked. So, yeah, what can I say other than we make mistakes, we learn from them, we, in this case, pay the heavy price monetary-wise, and we hope to do better in the future. I have only one thing to say, is to apologize to myself and to people that bought it, but as you know, everybody pushes their button because they want to push the buy button or the sell button. But I admit, I've been talking about PayPal. Am I wrong about the thesis? Well, I was right on the thesis based on the information that I got, but clearly I was wrong. So apologies on that. It sucks, and we will move on. All right, as you can see, PayPal down 20.5% on the day, down 53.5% over the past 12 months, and year to date it's already down 28.3%. Don't pay attention to the market cap here. It is already much lower than that, which also means that the multiples here are lower. Now, PayPal today, as you can see, is not a business that is declining, despite what many people think. No, this is a business that is still generating $33.1 billion in revenue, and it's still expected to grow a little bit over the next couple of years. If we're starting to see revenue decline, then of course, it would have been quite stupid to buy it. But no, this is still a company that is growing. Even if we look at free cash flow, as you will see, adjusted free cash flow for 2026 is expected to be at least $6 billion. So this is a company that is still expected to generate at least $6 billion in free cash flow in fiscal 2026. The market is currently expecting $6.5 billion. I think they're still quite generous, but $6.5 billion, then $7 billion in fiscal 27 and 7.7 in fiscal 28. Of course, these numbers will probably be revised down because they also told us that the 2027 guidance that they gave a year and a half ago, 2024, during Investor Day, well, that gets thrown out of the window. So again, all of these things, I'm pretty sure that they could have told us this 3 months ago, if not more. Right? Also, when you know that you're going to do this, why not announce the results early? That could also have maybe helped us a little bit here. But anyways, what I want to say here is that this is still a company that's going to generate over $6 billion in adjusted free cash flow in fiscal 26. Then quickly touching here on a couple of things in that report. So this is the second year of diversified profitable growth. Transaction margin dollars ex interest increased 6% year over year, and non-GAAP EPS increased 14% year over year. Taking near-term action to restore online branded checkout momentum, scaling experiences and improving presentment, driving selection. Making targeted growth investment across branded checkout, buy now pay later, consumer engagement, and agentic, 3-point headwind to transaction margin dollar growth in 2026 to drive durable long-term benefits. Of course, if it works, then we'll probably see this in the results. Driving durable growth across PSP and Venmo, PSP TPV increased 8% year over year, FX neutral in Q4, enterprise payments TPV growth back to double digits, accelerated Venmo revenue to $1.7 billion, growth increased around 20% year over year in 2025. Remember, they've had $2 billion as a target, I think, for 2027 or so. That's going to be reached, I think, in 2026. So there are some positive things in this report, but the small positive things are being overshadowed by the negativity, of course. They're expected to generate over $6 billion in adjusted free cash flow in 26, returning $6 billion in share repurchases, which I guess now that the stock is even lower, well, the buyback yield just keeps on increasing and increasing. And so what do we get? We get this TPV, $475 billion. So for anyone thinking that this is a small company, no, TPV is closing in to $500 billion. And that grew 9% year over year. Revenue up 4% year over year. Transaction margin dollars up 3%. And the rest we've seen before. As for who uses PayPal anymore, well, plenty of people use PayPal, Venmo, etc. So active accounts increased year over year. There are more accounts today than there were a year ago. Monthly active accounts also increased just 1% year over year. Number of payment transactions actually returned to growth, 2% increase here. Why did that decrease before? Because, well, they wanted to grow in a profitable way, not growth at all costs with Braintree, PSP, and all of that. And so for the full year, we're still seeing here a decline. So again, some positives, but all of that is being overshadowed by the negatives. As for TPV mix across PayPal's platform, branded experiences online and offline, 4% growth, that's 33% of the total. Venmo, still, as you see right here, fifth consecutive quarter of double-digit growth, that's 18% of the total. Then if you look at the branded checkout, that's the worst thing here, but that's 31% of the total that only grew 1% compared to 6% same quarter last year. P2P and other 10% growth, that's 26% of the total. And then PSP, which is 43% of the total, 8% growth year over year, which is an acceleration from the 6% that we've had before. And then when we look at guidance here, you get Q1 and fiscal 26. Only focus on fiscal 26 here because I do think that, again, the new CEO coming in, the bar has been set quite low. There still is a lot to prove, for sure. But I do think that these numbers here should be easily achieved, especially when you tell me that you're still expected to generate over $6 billion or around $6 billion in adjusted free cash flow. So some question marks around here. I just want to hear the new CEO speak. We'll have to wait a little bit for that because I really want to listen to how he talks about the business, the plan, and things like that in order to maybe change my mind back then. But like I said, I don't have shares anymore, still have what's left of the options. And then lastly, as you can see for the rest, I mean, PayPal was down 20%, Novo was down 14.6% in their report Wednesday before the market opens. Shop was down almost 10%, Duolingo down another 8.8%, Shift4 7.4%. I mean, there were plenty of stocks that took, again, a big hit on Tuesday for, I don't know, no apparent reason because I haven't seen any big headline at all throughout the day. Some names did go green. AST is up 10%. Rocket Lab is up 9.6%. Palantir, of course, is up 6.8%. I think I tweeted it out. I think if Palantir was a $50 stock, it would have been up 40% today based on the numbers that they reported. Incredible quarter. Applied Digital is up. Iron, Nebius, CoreWeave, so at least they're helping me out today. Intel is up a little bit and Anu is up, well, slightly. So all in all, it was a bad day across the board, but it was one of the worst days for PayPal shareholders, if there are any shareholders or bag holders left. And so all in all, that's about it for me in this video. First of all, I'm very tired today, but this very disappointed. Very disappointed with this investment, with this mistake, I guess, as well. Yes, some of you saw it coming, but a lot of the people that did comment on PayPal before barely looked at the earnings report. So it's not really real feedback, but fine. It's a mistake. It's a horrible mistake. Cost a lot of money. It sucks. I feel I got lied to, or at least didn't get the full picture. But hey, this is investing. You'll make mistakes along the way. You'll try to do better in the future. Why did I choose Robinhood? Because first of all, Robinhood is founder-led. Robinhood does execute, does move quickly, is a growth story, and I think it can become bigger and bigger. So that's why. Same thing here with SoFi and same thing with quite a lot of other companies out there. Will I ever come back to PayPal? I mean, who knows? Maybe if the new CEO proves me, I mean, maybe not me wrong, but if the new CEO proves that, okay, things are getting better, especially with branded checkout, then maybe yes, because then again, we're talking here about an extremely cheap company that has a free cash flow yield of what? Over 15% or so right now? We'll see. Anyways, let's jump into AMD, right? Probably cover it tomorrow as well. We'll do a live stream, Uber, Novo Nordisk, Eli Lilly earnings report before the market opens. So maybe I'll see you there. Thank you very much. Bye-bye.